I make it very clear. Bottom is in. We're going to be flatlining for a while we wait to see what the Fed does. But if we get what I think is going to happen November 8th, Katie, bar the doors.
Do you think that we've seen the bottom or are we headed for another leg down?
I have a slightly different view of what is occurring here. I've lived through many cycles, obviously, as everybody has on this call. What I find intriguing about the nature of this correction, if you want to call it that, or the potential of a recession, is that it is in the foreshadow and then the shadow of $6 trillion worth of printing. And so you think about what occurred during the pandemic, which is unprecedented in any economy's history, to take that much and print it in basically 30 months and not to expect inflation. Well, of course, that's why we have what we have right now, a 40-year new high in inflation. But at the same time, if you could figure out the printing presses were going to stop, you would be forecasting a new leg up. And here's my thinking on this. There's two bills right now in front of Congress. And so one is a watered down version of Build Back Better. They're calling it anti-inflation, what everybody knows is a joke. This is very inflationary, but it's a spend over 10 years. So that's one attribute of more printing, which would maintain an inflationary stance and, of course, keep the Fed raising rates, which is not good for equities. And then there's this interesting situation in the chip bill where we're going to spend billions of dollars. It's, again, free money from a helicopter going into the Midwest to try and catch up with what's happened in our lack of ability to manufacture semiconductors. Now, cut it to what it is. It means that management, the Intels of the world, the AMDs, they made a mistake. They moved all their production offshore decades ago. Took the U.S. down from 32% of manufacturing down to less than 10. Now they got to bring it home. We're going to print money to make that happen. That also is inflationary. And you can sell it as something as a defense to the U.S., but basically you're supporting idiot management. That's basically what happened. You're picking a sector. Taxpayers are not getting anything from it other than just to give their tax dollars away to idiot management. And I don't mean disrespectfully, but there's management that can execute and foresees the future, and that's why they're good managers. And then there's idiot managers. So you could say many idiot managers guided manufacturing out. And why I bring this up towards determining the future of the market is every midterm election, and this starts in about 2 weeks, okay? It's November 8th, by midnight, November 8th. And this is my thinking as an equity participant. And I don't think a lot of people think this through. You've got a situation now where normally any incumbent, you don't have to get into politics, doesn't matter. It doesn't matter what party's in power, they lose seats in the midterm. That happens 100% of the time. There's fatigue, people are tired, they want to make changes, and it's happening at a regional level. This time, though, in my view, there's at least a 50-50 chance that both the House and the Senate flip to the other party. I don't even want to get into politics, but the point is there's a lot of unhappy campers in America today based on inflation around food and energy. They're really pissed. And so when that happens, and it's so close, it's November 8th, this is the good news for investors. After that night, there will be total gridlock in Washington for the next 2 years. There will not be a single piece of legislation passed. It will be impossible to get anything done, and that's a great thing. That's a wonderful thing because markets love Washington gridlock. And I think whether you want to say it's PE expansion or earnings expansion, and it may be both, we're going to continue this leg up. Now, not 30%, but if you have an option between making 8 or 9%, including div distribution and yields on the S&P 500 at a 17 to 18 PE, or getting 2 to 3% on long duration treasuries, I think that's a no-brainer. You're going to stay long equities. And that's my position. I am underweight fixed income big time. I don't care when the Fed stops raising. That's another debate. Do they do 50 basis points? Do they 75? We're going to find that out. They may do 50. The narrative has changed to a soft landing for the first time in decades. Nobody gives credit to the Fed for ever delivering a soft landing because they never do. maybe because of the backwater of all this printed cash, they have that opportunity to do this. So bottom line is, so I make it very clear, bottom is in. We're going to be flatlining for a while we wait to see what the Fed does. But if we get what I think is going to happen November 8th, Katie, bar the doors. Gridlock in Washington is a wonderful, wonderful thing. I think you missed a third announcement from BlackRock and Fidelity simultaneously. They each put $200 million of equity into Circle in the F round at a $9 billion valuation, less a discount they got, which I'm going to assume is 15%. That is huge. Remember, this is a very controversial asset class. Stablecoins are a shit show right now. And there you have the largest, most conservative, completely compliant institutions on earth putting $400 million. Now, I have to disclose, okay, I participated in that round. I saw that happening. So I'm in that round. I own a piece of Circle now on the F round beside Fidelity and BlackRock. And I did it because I saw them going into it. I would have never have done that without the endorsement of such compliant SEC regulated entities making a bet in the middle of a shitstorm on stablecoins. It's a turning point for crypto. That's what I think. Listen, we were supposed to get a policy just on stablecoins reviewed this month. They pushed it, and I'm talking about now on the Hill in Washington. They pushed it to September to consider it. You got to remember, there's Haggerty, there's Loomis, there's Toomey, and Toomey is going to retire in January. He wants to get one piece of policy done. He wants to get stablecoins regulated. And the policy they're putting forward, I've been spending a lot of my time in Washington on these bills. And I'm not the only guy doing this. And I'm totally transparent on my interests here. I want to get some kind of payment system for my global businesses when we're transferring cash. I want to use USDC between here and Geneva. We index. I have an indexing business. So we're constantly, every day, taking US dollars, ACHing it over to Zurich. They charge me a fortune for that. It takes 36 hours sometimes. Then they nip me on the FX trade when I go into Swiss francs and buy a Nestle or a Roche or whatever I'm buying to index it. And then they screw me again on the way out. I could completely eliminate that with a payment system. And everybody knows that. So there's a lot of utility. Second reason you got to be bullish here is this. Both sides are supporting this, Dems and Republicans, because it makes the dollar, if you get a U.S. stablecoin policy in place, it makes it the default payment system of the earth. Not the Swiss franc, not the euro, not the British pound, not the Chinese yuan, the U.S. dollar. So this is coming back to the House on the floor in September, and it may be the first piece of legislation that provides the launch ramp for more crypto policy. Now, you know there's a war going on between the SEC and the other regulators, a turf war on crypto, but you can't deny crypto is here to stay. In fact, I believe in the next 10 years, it'll be the 12th sector, the S&P. And I'm trying to make bets all through the continuum of projects. I own everything. I have 32 positions. I don't know which ones are going to work. I don't need them all to work. I just need a few. Huge position in Ethereum, huge in Bitcoin, Solana, Polygon, Helium, Pollen, the new one I just took on. There's all kinds of projects. And the thinking for me is this. You go teach a class of MIT graduates in engineering right now. I do guest lecturing there. 1/3 of the class are entrepreneurial. Where do they want to go? They have no interest in working in any of the 11 sectors of the economy. They want to work on the blockchain. They want to be in crypto. You can't pour that much intellectual capital into something and not have great outcomes one day. It's like being at the beginning of the internet. And I'm talking about the smartest, brightest men and women from around the world saying, screw everything else. I want to work on crypto.